Ladies and gentlemen, the stock market is not looking good today at all. We're going to break down the charts here on the S&P and the NASDAQ, and we're going to break down a bunch of stocks. We'll go over what stocks are dragging down the markets, and of course, what I'm looking to do as I bought more stocks today. So hit the like button, make sure to subscribe, and don't forget to get up to 20 stocks from Moomoo with at least a $100 deposit. Check out that link down below or go to stocksurfs.com/Moomoo, and this offer is exclusive to this YouTube channel, guys, and for a limited time, your uninvested cash will earn up to 8.1% APY. So again, use that link down below or go to stocksurfs.com/Moomoo. You might as well get your free money, and with that being said, cheers. Let's dive right into the video. So it's about 12:45 p.m. right now on the East Coast, and we have the S&P 500 down 1.7%. The NASDAQ's taking a big beating, down almost 3%, as the Dow's down almost 1%, and we have the Russell actually not doing that bad, down only 0.5%, as the VIX, are you guys ready for this, is up over 17%. Now the VIX is at 17 points again, which, if you guys remember, the VIX was at 17 points, I believe, on Friday. Let me double check. Yeah, on Friday we hit 17 points. Then yesterday we got back down to the high 13s, and now we're up almost 25% off of yesterday's lows on the VIX. And you can thank Tesla and Google for that, even though Google's earnings were actually not bad at all, in my opinion, although YouTube revenue is, it did miss the estimate. That's not the best sign. But Tesla on the flip side, they're not looking good at all. We'll talk a little bit about Tesla in this video, guys. So going back to the S&P 500 here on SPY, we're now down $10 per share on SPY, and on the 4-hour chart, now we're under both moving averages, and we're pretty much at this main support level from the last month, being about $543, $44 per share, which you guys can see that held in the end of June into the early days of July. You guys can see right here, then we rallied to all-time highs. I'm sure you all remember that. And now we're down about $20 from all-time highs, or about 3.7%. And we're testing this spot again, about $544 per share, which, guys, newsflash, if this breaks, we could be seeing even more downside on SPY. The next gap to fill could be anywhere from 535 to 537. That's a big spot of resistance, right? Another spot here is in the lower 530s, 532, 533. But overall, man, this thing's getting pretty oversold, and I wouldn't be surprised if we got some sort of relief rally or consolidation. Maybe not later today or tomorrow for that matter, but at some point in the near-term future. I think this is getting a little bit oversold, but keep in mind the next gap to fill is around 536 on the downside on SPY. And on Triple Q, you guys can see this is down even more than SPY. Obviously, it's down now $40, which is nuts, per share from the all-time high, or about 7.5%. So Triple Q is actually almost in correction territory officially right now, which, if you guys didn't know, correction territory is whenever a stock or an ETF is down 10% to 20% from recent highs, and we're at 8% almost on Triple Q, so we're almost there, and we're under the moving averages, just like SPY, and now we're trading at a multi-week low, with the next big support coming up being at about 463 to 465. That actually was resistance in the end of May, you guys can see, and it was resistance in the early days of June. So that could be where we get some sort of consolidation, maybe a bounce back, a dead cat bounce, whatever you want to call it. But yeah, very oversold, just like SPY. And of course, as you guys know, the NASDAQ on downturns gets hit more than the S&P 500. It just is how it is. It's actually down almost double what the S&P's down. Like I said, S&P's down, 3.5% from highs, and the NASDAQ's down almost 8%. So yeah, pretty much double what the S&P's down. And like I said, you can thank Tesla for that, which the company reported earnings, and we called it out to a T. I mean, everybody with half of a brain saw this coming, right? The stock ran up way too much heading into earnings, and it was pretty, I don't want to say the run was completely baseless, but why did the stock run 58%? I mean, why? I don't know. Maybe it was baseless. I didn't really see much to make the stock run $100 per share. So it didn't take a rocket scientist to tell you that Tesla was going to fall after earnings, especially as they missed EPS. Revenue barely beat, or I guess it beat nicely, but still, revenue's only growing, excuse me, guys, revenue's only growing 2% year over year. That's nothing. Automotive revenue's actually down 7% year over year. So, yeah, I mean, not looking so great. Competition in the U.S. is spiking. I think I was reading that competition, other U.S. electric vehicle sales other than Tesla were up like 33% year over year. Teslas were down about 9% or something like that in the U.S. from last year. So clearly there's competition. There's demand problems. They're doing everything they can. There's so many incentives in China and the U.S. for people to go and buy a Tesla, but it's not really moving the needle as of right now. Their margins are getting squashed. So this stock's down 10%, to no surprise to me, right? I'm not surprised. And we're approaching a big level of support now at about 205 to 210. That was actually resistance in February, back in May as well. So this could hold as support potentially right by the 180 moving average here on the 4-hour chart. But honestly, guys, for me to even consider Tesla stock as a buy, I need to see this thing down to the 150s, preferably under 150. I think a buy range for me, call me crazy, is between 100 to 125, right? That's just my opinion. That's with a margin of safety built in. And when you're buying individual stocks, guys, when you're investing, you don't want to buy at any old price. You want to buy at levels that make sense, that have margins, or, where a margin of safety is built in. And for me, Tesla, 100, 125, maybe 135 bucks. I'd start nibbling a little bit. That's where I'd consider it, but we're nowhere near that at this point in time. And Google is down as well, almost 5% right now. We're trading in the mid 174s, and Google reported pretty good numbers. They beat EPS, they beat revenue. Cloud is growing. They're growing revenue 14% year over year, but YouTube revenue missed the estimates, although it is up, I think, 13% year over year. It came in at $8.6 billion. Last year they did, I think, 7.6 in the same quarter. So Google is doing pretty well, but their stock's down, which I'm actually happy about that, considering I'm a long-term shareholder. I've owned the stock for years. It's my biggest individual stock holding. And guess what? I bought more share. I bought more shares. Holy crap, guys. Can I talk today? Let me get some coffee. Cheers. I bought more shares today, guys, at $175-ish per share. I added, and I'm going to continue to add. If this thing goes to 160, 165, bring it on. I'll add more Google because I think it's actually one of the better deals in the stock market right now, especially when you're looking at big tech. I think they're trading at 22 times earnings, which is insane. I think their forward earnings might be lower than that. So I'm all in. Well, not literally all in like it's my only stock, but I do own Google. I'm buying more. And like I said, I'll continue to buy more. So the entire market is down, guys. Big tech is just getting nailed today, from Tesla, like I said, to Google. Amazon's down a little bit, not nearly as much, but down 2.4%. We have stocks like Apple taking a beating today, down 3.2%, which this was another one that was much needed, guys. It got way too hot after the Apple Intelligence event, right? We're now down to 217, right by the 180 moving average. That's good. And let's see what else. Microsoft, right? MSFT down over 3%. We have Meta down as well. So these stocks are all getting hit. People are like, oh my God, are these companies going to report bad earnings too, like Tesla did? Like Google. I wouldn't say Google's earnings were bad, but they didn't knock them out of the park either. So people are like, oh, okay, what's going to happen now with these other companies that are set to report in the next week or two? But guys, I don't think this is an overall stock market crash, the start of a big bear market or anything like that. This is just simply a short-term sell-off. That's what everything is telling me in terms of the indicators I'm looking at. I just don't see this being a stock market crash, really. I think this is just a buy the dip opportunity, a short-term blip. And I could be wrong, but that's kind of what I'm thinking. So what do you guys think? Let me know your thoughts in the comments. Smash that like button. Don't forget to subscribe as well. Run that like button and subscription button up. And if you guys want to get 3 stocks, my top stocks, every single Monday delivered to your inbox, your email, in the pre-market for free, check out that link down below, guys. No spam emails, I promise. I'll send you again my top 3 stock picks every single Monday morning. Check it out, link down below. And don't forget to also get your free stocks for Moomoo, up to 20 stocks with at least a $100 deposit. Just go to stocksurfest.com/Moomoo. Check out the link down below. And with that being said, guys, cheers. I'll catch you all in the next video.